What's up, everybody? Welcome to another edition of Dave's Daily Dive, where I go ahead and dig into the major macro charts of the day. But don't leave you hanging there. I give you 5 Zacks rank number 1 strong buy stocks that are breaking out to new highs. So that way you have a few actionable items that you can pop up on your radar, see if you can't find some trading opportunities. So the first thing I want to do today is our good old friend, the VIX. Now, I had an intraday chart up, but I wanted to stay zoomed out here to give some perspective. Now, we've had North Korean missile tests in the past that have created, some pretty good moves in the VIX. We got one today, and it took the VIX from about 990. That's a 990. That's the grossest 990 I've ever seen. 990, yep, up to about 1030. So not much of a spike. And if you look at it sort of historical perspective, absolutely nothing. So it just got above 10 bucks and then went ahead and reversed back down. So we had this sort of, around 2 o'clock Central, got a little bit of trepidation in the market. The NASDAQ actually went negative, and then things turned around, and we wound up finishing on a high point with the NASDAQ up almost 0.5%, but the other averages, the major market averages, up about 1%. And then the Russell, nice little move too. So we're going to dig into some of those. But overall here, North Korean missile shot into the Sea of Japan. Nobody cares, which we never should have cared anyway, right? Maybe. We know it's all a bunch of hot air. I think haven't they done like 20 tests this year? So boy crying wolf scenario, I think, is beginning to start playing out here with this North Korean news. So either way, market didn't care. What did the market care about right now? So first, let's take a look at the S&P 500. Now, you're going to see some spectacular things, my friends, and what you're seeing today is the breakout. So I've got the big fib that we were playing off, and it's gone. We're at all-time highs. So what do you do now? Well, you draw yourself some fib extensions. So that means you go across into the future. So I'm going to add a few common ones here. First, we're going to do the 38.2. Oh, wait, I forgot I had to do that negative. Let me try that again. Swing and a miss. I forgot that I'm folding across. There we go, negative 38.2. All right, there. So now you have the first target on the S&P 500 to the upside. That's 2666.35. That's your first little upside target here. That's the 38.2% extension of this move from the August low on through to the October high. This is probably the structure I'll be playing with for a little bit, so keep your eyes locked, screwed, and glued to it. After that, you've got the 50% extension. That's well above and beyond there. But first target, 2666. Should the market come back down, you have the psychological 2600, but 2597, I think, wherever exactly this was in here. So overall, very bullish, and 2557 serving as your 50-day moving average on the S&P 500. Definitely want to talk about the Russell. The small caps of the Russell benefit the most from a tax deal getting passed. We're going to have to do the same thing here, folks. August lows, October highs. You got your fibs back down to 38.2. And then guess what we've got to do now? That's right. We've got to draw our extension. So this time I'm not going to screw it up. I'll remember that I got to go negative here, okay? So add, and I'm going to set this up as negative 38.2. Give us our first price target to the upside here on the Russell 2000. 1578, my friends. So another 42 handles north of where we traded at today on the Russell. Interesting to see how it kind of hits this ceiling, treads sideways, the range sort of expands, breaks to 23.6. That's a weaker fib anyway, down to the 38.2, which also happened to coincide with this high here in July. So a very important level, and found a bid. So despite getting underneath this 50-day moving average, this happens a lot. I've noticed this where the market, any market or a stock or whatever it is, will do this little rope-a-dope. I call it the rope-a-dope, also known as a stop grabber, where it comes down and it grabs these stops south of a important line like, the 50-day moving average. Just kind of really tries to shake out the weak hands and then finds a bid, and this certainly did in this sort of 1450 area, and it's been off to the races ever since. Now, the thing about the Russell is it doesn't, either it's moving or it's chopping sideways for an extended period of time. It moves sharply. You don't get a lot of this sort of slow, steady buildup like you can see in the Dow or something like that. It's typically a more jagged move and then, sideways. So it's more like steps versus a slow, easy slope. But I guess that's indicative of the small caps because they tend to move a little bit more higher beta names. So the Russell was up like 1.5% today, so that's pretty good. So there's your targets, 1578 here on the Russell, with basically today's low being the support level on that. Okay, so let's dig in a few of these individual names that you could look at. The first is Bruker. So Scientific Instruments, and speaking of those moving sharply, we got a leapfrog of the 50-day moving average. Comes back into it in July. Again, your little rope-a-dope. And I'm sure if I drew the fib from here to here, you're going to end up seeing support there. But what's happening recently is that you have this 50-day carving out plenty of support. Here, lots of buyers stepped in here, just above $31. Took it higher up on through the new 52-week high. If you want to chase this, I suggest it's actually setting up a decent risk versus reward. You could put your stops just south of 35 down in this $34 range. That'll get you underneath this sort of top tick. I think that'll provide a little bit of support for you. If you're, for the faint of heart, I suppose you can wait, and 31 would be a more favorable entry. But I don't think that's going to happen. I think really this 35 level is going to be a much firmer sort of floor there. That's what I'm looking for on Bruker, ticker BRKR. Then I've got Dana Incorporated, ticker DAN. So thermal driveline, sealing, and thermal management products for vehicle manufacturers. Now, I don't know how you guys feel about new cars, but I do love new cars. But new car sales are starting to slow a little bit. It's putting a little bit of pressure on some of the prices. But we'll see. October was actually pretty good, but they're worried about what's going to happen over the course of the next few quarters. Anyway, you slice it, though. Do have the stock came down, found support at the 50-day. That was a while ago. Since then, it's been on a little bit of a run. You can sort of see how these steps are being put in here also, little steps of support. The last one being right around 30. So this is a stock you can go ahead and buy. Put your stops right around this $30 level. It puts you awful close to the 50-day moving average, providing some support, and you got a chance to go ahead and ride this thing higher. Now remember, these are all Zacks rank #1 strong buy stocks, so they've had earnings estimate revisions to the upside that have helped to support this price action. Then you got Fair Isaac Co. FICO, which is exactly who you think it is. You either love these guys or you absolutely hate these guys. These are the ones that give you those credit scores that dictate how much money you're spending on those interest rates for new cars and everything. So after sort of having a rough time in August and September, caught a bid, got above this 50-day, and this is really an important candle. You see, this day it engulfs the previous range of the last several days and goes higher. That was a major day there for them. So I would say that the support lies just underneath the top end of that range. Maybe even could say that intraday range the other day, which happens to coincide with this 50-day moving average. So this is a stock with plenty of momentum. You can buy it, put your stop just south of 146. Gives you a nice little risk versus reward there. Commodity Channel Index certainly is overbought, but that's what you'd expect on a stock that's been just rocking and rolling like this, up from 114 in December of last year. That's Fair Isaac, ticker FICO. Then we've got Skechers. So Skechers had a fantastic year a couple years ago and then came crashing down. And recently things have begun to look up a little bit, okay? Major resistance level here at 30. And look at how textbook this is. A gap up above 30. Stalls out again. Now this should look awful familiar because every time it gets into this sort of 34 level, it's been hesitating. Now remember, this is Zach's ranked number 1 strong buy, so these earnings estimates have been creeping up also. But this is certainly a floor right now for Skechers, probably within this 30 handle. It's probably sort of a gradient of support that you have here. You may not feel comfortable giving this stock, 15% cushion all the way down to the 50-day or near the 50-day, putting a stop down here because it has been rather choppy. Maybe the better strategy is to wait for this to chop down a little bit. This is what I'm talking about. You see the chops down and chop back up and chop down and chop back up. You can take advantage of that. Wait until you see the commodity channel index get oversold on this, and then that's when you're better off initiating a position and just peck at it a little bit, because the trend has not been all that strong here in Skechers, but they are trying to knock on heaven's door there at new 52-week highs at Skechers SKX. And the last one I got for you, heck, I got it in my kitchen. SodaStream, ticker SODA, and this has really been a success story throughout the course of 2017, getting above that 50-day moving average, interacting with it on a few occasions, a little bit of rough stuff here, but since then, just boom, just keeps going. My suggestion, wait for a retest of the 50-day, because it does it all of the time, unless you think you're in one of these gap and go situations, which you could, as this is sort of butting up against this resistance level. So 2 things that you can do, actually, now that I got your attention. You can either A, go ahead, buy this breakout and just put your stop real short and you just hope that you caught the breakout, or wait for it to come back down to the 50-day and you'll have a more favorable entry there, but you might miss out on the trade altogether. But hey, I think being disciplined is the way to work with this one. And again, it's the Zach's ranked number 1 strong buy, so you know that those earnings estimates are moving in the positive direction. That's all I got for you folks here today. Remember to follow me on Twitter at Bartosiastics for all of my hijinks. And of course, I run the Surprise Trader and the Momentum Trader here at Zax.com. Thanks so much for hanging out with me here today, and I will see you all later. Have a good one.